Tensions between Iran and the West are back at the forefront of things. A European Union ban on Iranian oil came into full effect on July the 1st, part of a push by Western countries aimed at choking Iran's export earnings and forcing it to curb a nuclear program they fear includes weapons development. Joining me to discuss the oil market going forward is Hannes Loacker, commodities analyst at Raiffeisen Bank in Vienna. Hannes, thank you very much for joining me. Now, oil prices have slid slightly following decent gains this week. What do you put down to being the main driving force behind this recent rally? And do you see downside risks for oil, seeing prices move lower perhaps in the near term or not?
Yeah, I would say there are two main reasons why we saw this price rally. On the one hand, we saw a huge decline, and so we, as a consequence, then we saw some short covering. And of course, apart from a more positive sentiment for risky assets, the Iran issue popped up again, and this definitely helped sentiment. So we saw quite a huge increase. The thing is, if it comes to fundamentals, still the oil market is rather weak. So there are several risks, especially the European debt crisis for sure, and quite weak demand in the OECD countries. However, we do not see a big risk that we will see a huge drop in oil prices.
In that case, what exactly is your short, mid and long-term spot price forecast then for crude and Brent oil?
In the very short term, we think that we will be around $95 to $105, but then on average for the third quarter, for the actual quarter, we see an average price for Brent of $106 and even higher oil price in the fourth quarter of $112. If we take a longer term view, we are rather on the bullish side. We see oil prices increasing next year to $114 and then even more in 2014 and 2015.
What about the impact of this EU oil embargo on the oil market so far and later on this year, as well as this supply and demand side issue regarding oil right now?
That's an interesting question and important issue. Like the OPEC production right now is at the highest level since October 2008. So this oil embargo clearly helps the sentiment on the oil market. Nevertheless, it's hard to say how much production will be taken away due to this oil embargo. Exports of Iran may even drop by 1 million barrels a day from the previous 2.1 million barrels a day. Probably we won't see such a big drop in oil exports because probably Iran will react with giving greater discounts to its existing and new customers. Probably it's more realistic to forecast a drop of 500,000 barrels a day, so that Iran exports will drop by approximately 25 to 30%. Nevertheless, this clearly helps sentiment, especially since Iran now threatening that they will block the Strait of Hormuz. This is definitely helping the sentiment and led to the most recent oil price increase, I would say.
So do you think this will be one of the main drivers for oil prices in the nearest future, this threat again to block the Strait of Hormuz?
Put it that way, if Iran really tries to block the Strait of Hormuz, then definitely this will be a driver. If they are only threatening and there is no action, this has been done several times, and this won't bring oil prices much higher. Nevertheless, I doubt that they really have the military capabilities to block the Strait of Hormuz for a longer period of time, especially since the US wouldn't accept such an action and would quickly intervene. But in the short run, then it would help. But still, I think there's still a long way to go that Iran really takes such a step.
Also, we have this EU embargo on Iranian oil in place now, but what about other countries outside of Europe? They also seem to be following suit, South Korea and India, for example.
That's right, yeah. Like the US put pressure also on other countries outside the EU, and that's perfectly correct, that apart from India and South Korea, also China reduced their oil imports from Iran, and so it's really interesting to get new figures then and how things really are developing. Yeah, definitely. That's also taking away some supply, but it's needed because the oil market right now is rather even oversupplied, I would say.
Hannes, thank you very much for discussing the matter with me and sharing your oil price outlook. Now, coming up later in the day on Dukascopy TV is a press review with Natalie MacDonald and a look at the Eurozone retail sales with Monica Gibson. For the moment though, goodbye.